Bitcoin has been making headlines again, and not just for reaching new heights. The latest analysis reveals some serious volatility and warns investors to tread carefully. If you thought you could just ride the wave of excitement, think again. Trends are shifting, and it's crucial to understand what's happening beneath the surface. We'll break down not just Bitcoin, but also Ethereum and XRP, so you know what to watch for. This isn't just another market hype, it's about being smart with your investments. Whether you're a seasoned trader or just getting started, personal financial responsibility has never been more important. So, stick around as we dive deeper into the current landscape and reveal some unexpected insights that could change the way you think about trading. You won't want to miss what's coming up next. As we navigate the current state of Bitcoin and altcoins, it's essential to pay attention to some key numbers. Right now, Bitcoin is hovering around $27,500, reflecting a 3% increase in the past week, but experts are warning that volatility could be just around the corner. Ethereum is also in the spotlight, currently trading at approximately $1,800. That's a gain of about 2% recently, but the market remains unpredictable. Meanwhile, XRP is seeing some action as well, with a price of about $0.50, which is important to note considering its ongoing legal battles and potential implications for U.S. investors. The SEC has been tightening its grip on regulation, emphasizing that compliance is more critical than ever. As we approach the end of the year, these regulatory changes could shake up how platforms like Coinbase and Fidelity operate in the crypto space. Institutions are taking a keen interest in this market as well, with BlackRock recently filing for a Bitcoin ETF, which could open up the floodgates for more mainstream investment. Plus, with the Federal Reserve hinting at interest rate adjustments, market dynamics could shift significantly, impacting everything from retail traders to high-stakes institutional moves. Take California, for instance, where tech-savvy investors are leading the charge in crypto adoption. On the other hand, states like Texas are seeing a surge in mining operations, making it a hotbed for crypto activity. As these trends evolve, understanding where the money is flowing becomes crucial. U.S. investors must remain vigilant, as market hype can often lead to miscalculations and unexpected downturns. So, whether you're following the latest candlestick patterns on your trading screens or keeping an eye on regulatory updates, staying informed is key. Remember, securing your investments is paramount. Using trusted platforms like Coinbase or Gemini can provide a layer of safety in these turbulent waters. As retail traders navigate this landscape, keeping emotions in check and focusing on solid analysis over market noise will be essential for long-term success. The warnings are clear. The risk of a price dump looms, and being prepared is your best defense. Make sure you're not just following trends, but also understanding the fundamentals behind them. Let's dive into how these market trends could play out for a typical U.S. retail investor over the next week. Picture this. You're sitting in your living room, coffee in hand, and you decide to make a move on Bitcoin. With the price hovering around $27,000, you're eyeing an investment of $1,000. If Bitcoin sees a price pump to $30,000, that's a $3,000 gain on your investment. But remember, this scenario isn't guaranteed. If you buy at the peak and then the price takes a dip, you could quickly find yourself facing a loss. If you choose to buy Bitcoin on Coinbase, you'll incur a fee of 0.60% for transactions. That means an additional $6 just to get in on the action. Then there's the potential for volatility. If Bitcoin swings down after you buy, you could feel that sting even more. Now, let's say you're considering Ethereum as well. With a current price around $1,700, you think it's a solid buy. So, you commit another $1,000. If Ethereum rallies up to $2,000, that's a potential gain of $300. But if you opt to stake your Ethereum on a platform like Kraken, you could earn an annual yield rate of 4%. That's about $40 just for holding your investment rather than trading it. However, if the market tumbles, you could lose more than you gain. In a worst-case scenario, let's say both Bitcoin and Ethereum take a dive due to unexpected market conditions. Imagine waking up one morning to find Bitcoin had slipped to $25,000 and Ethereum dropped to $1,500. Your $1,000 investment in Bitcoin is now worth only $925, and your Ethereum has dropped to $850. That's a combined loss of $225, illustrating how quickly fortunes can change. The lesson here is clear. With great potential for reward comes significant risk, especially when you factor in the movements made by larger players in the market, often referred to as whales. Considering altcoins, the narrative is similar. If you're looking at Ripple XRP, and you decide to invest $500 at $0.50. A rise to $0.75 grants you a return of $250. But if regulatory news hits, causing XRP to plummet down to $0.30, that's a $200 loss. Regulatory scrutiny can change the landscape overnight. If the SEC takes a stand that impacts XRP, your investment could be riding a roller coaster of emotions, showing just how unpredictable this market can be. When analyzing candlestick charts, you might notice patterns that suggest a reversal or continuation. But if you're making decisions solely based on these patterns without understanding the broader context, you could be setting yourself up for disappointment. Technical analysis can provide insight, but it's essential to balance it with a solid grasp of market conditions. Are you seeing green candles that signal bullish sentiment? Don't get too comfortable. Always consider the possibility of those red candles creeping in. As you watch the trading screens, remember the importance of staying vigilant. Tools like limit orders can help you manage your buying and selling points without getting swept up in the hype. Above all, taking personal financial responsibility is critical. Don't let the allure of quick gains blind you to the risks involved. Set realistic expectations and always have a plan in place. With money flowing into and out of these assets, your approach needs to be strategic. Whether you're buying Bitcoin, Ethereum, or exploring altcoins, understanding the landscape will help guide your decisions. Institutional interest remains a driving force, and as more companies enter the space, expect continued fluctuations. But remember, you're not alone in this journey. Staying informed is your best tool for success in the ever-evolving crypto market. If you find yourself in a bear market, the key is not to panic. By monitoring trends and being prepared for changes, you can navigate these stormy waters more effectively. Conversely, in a bull market, you can capitalize on those upward trends, but caution is still paramount. Making informed choices is the best way to weather the storms and seize the opportunities ahead. Lastly, always prioritize security in your investments. Whether you're using a hardware wallet or a reputable exchange, safeguarding your assets should be a top priority. So, as you consider your next steps, think about how the market dynamics will shape your experience. With these examples in mind, take a moment to reflect on your strategy and how you can best position yourself for whatever comes next. Let's take a closer look at Bitcoin and how it's faring in today's market. With recent fluctuations, it's important to understand that volatility is part of the game. As Bitcoin continues to hold its ground as the market leader, investors should remain vigilant and informed. Now, shifting our focus to altcoins like Ethereum and XRP, these digital assets also have their own unique narratives. While they can offer intriguing opportunities, they can also be influenced by Bitcoin's performance. This interconnectedness means that any movement in Bitcoin could ripple through the altcoin market. But here's the part nobody is telling you. It's crucial to analyze your trading options. Let's break down 3 popular US-compliant platforms: Coinbase, Kraken, and Gemini. Each has its strengths and weaknesses that can affect your trading experience. Starting with Coinbase, it's user-friendly and great for beginners. They offer a wide array of cryptocurrencies, but you might face a trading fee of about 0.5% per transaction. Plus, the minimum investment is just $2, making it accessible for those who want to dip their toes in the market. Next up is Kraken, known for its robust security features and lower fees. Kraken's trading fees start at 0.16% for makers and 0.26% for takers, which is competitive. However, their minimum investment can vary based on the asset, often starting around $10. This makes it a solid choice for more seasoned traders looking to optimize their costs while trading. Lastly, let's talk about Gemini. They pride themselves on regulatory compliance and security. Their fees can be a bit higher at about 0.35%, but they do offer a $0 minimum for certain trades. This can be appealing for those who want to trade smaller amounts without worrying about hitting a minimum threshold. As you evaluate these platforms, remember that while fees matter, so do supported assets. Bitcoin may be the focus, but many altcoins can offer diversification opportunities. Each platform has its own selection, which can affect your investment strategy. It's also worth considering that institutional interest in Bitcoin and altcoins is growing. Companies like Grayscale and Bitwise are paving the way for more investment products that help bridge traditional finance with digital currencies. Their ETFs could provide a more familiar structure for investors. Additionally, the potential for ETF approvals is a game changer. If the SEC greenlights Bitcoin or altcoin ETFs, we could see a significant influx of capital. This could lead to greater market stability and potentially boost prices, But until that happens, caution is key. So, as you navigate these waters, keep an eye on the broader trends. Bitcoin's market dominance is often a bellwether for the rest of the crypto space. If Bitcoin soars, many altcoins will likely follow suit, but if it faces a downturn, those same altcoins could suffer even more. Remember that security is paramount. Choose platforms that prioritize safeguarding your investments and always enable two-factor authentication. While the allure of quick profits can be tempting, it's essential to prioritize the safety of your assets over hype. As retail traders, staying informed is your best defense against market volatility. Whether you're trading Bitcoin or exploring altcoins, knowledge is your most valuable asset. Take the time to educate yourself on market trends and platform features. With market conditions constantly shifting, it's wise to prepare for downturns. A well-thought-out strategy that includes risk management can help you weather potential market crashes. This could involve setting stop-loss orders or diversifying your portfolio across different assets. Ultimately, understanding the flow of money in and out of the crypto market will empower you to make smarter decisions. Monitor market sentiment and be wary of potential pitfalls, especially during periods of extreme volatility. In conclusion, keep your finger on the pulse of Bitcoin and altcoins. Utilize technical analysis to inform your trading decisions, but don't let emotions drive your choices. The more informed you are, the better equipped you'll be to navigate this exciting yet unpredictable landscape. All right, let's dive into some concrete steps you can take this week to better position yourself in the Bitcoin and altcoin markets. Step 1. Set a budget. Decide how much you're willing to invest. A good rule of thumb is to stick to no more than 5-10% of your overall portfolio in cryptocurrencies. This way, you can explore the market without putting your financial well-being at risk. Step 2. Secure a reliable crypto wallet. If you're serious about investing, consider using a hardware wallet like Ledger or Trezor. These wallets offer enhanced security for your assets, keeping them safe from online threats and hacks. Step 3. Choose a reputable exchange. Platforms like Coinbase or Kraken are great options for buying Bitcoin and altcoins. Make sure to set up two-factor authentication for added security on your account. Step 4. Monitor the market closely. Look for any signs of price dumps, especially with Bitcoin and Ethereum. Use apps like Blockfolio or CoinMarketCap to track real-time price changes and set alerts for significant shifts. Step 5. Stay informed about institutional interest. Follow news on companies and funds that are investing in cryptocurrencies. For example, keep an eye on announcements from firms like BlackRock or Fidelity. Increased institutional buying can often lead to upward price momentum. Step 6. Diversify your altcoin investments. Instead of putting all your eggs in one basket, consider allocating a small portion of your budget towards promising altcoins like Cardano or Solana. Research their use cases and community support to make informed choices. Step 7. Keep an eye on regulatory developments. The SEC and other regulatory bodies may release new guidelines that could impact the market. Subscribe to reputable financial news outlets to stay updated on any changes that could affect your investments. Step 8. Prepare for volatility. Have a plan in place for what you'll do during market downturns. This could mean setting stop-loss orders on your trades, or simply establishing a buy-the-dip strategy for when prices drop. By taking these steps this week, you'll position yourself to navigate the complexities of the Bitcoin and altcoin markets with confidence. Stay informed, stay secure, and most importantly, trade responsibly. As we look ahead to the next 90 days, will Bitcoin maintain its dominance amidst the ever-changing landscape of altcoins? The volatility we've seen lately serves as a reminder to stay vigilant and informed about your investments. What strategies are you considering to navigate these potential market shifts? And remember, if you want to keep up with the latest trends and insights, don't forget to subscribe to the channel for daily